Hello students. Okay, last class we saw about what are the some of the concepts of national income like GNP, GDP, real income. Then we studied about the measurements of national income. In that we studied about expenditure, output and income method. In that we saw about product method, and last we studied about was double counting. Now after that you will see that what is the gross value of the farm output in India, total, the gross value of the farm output in India. In that the first point is, in India there are a total of 64 agricultural products. The first point it says there are a total of 64 agricultural products. Second one is, each crop is measured by multiplying the area sold by the average yield per hectare. That means the crop is separated out here. And each crop is separately measured per hectare. Understood? Each crop is measured per hectare. Next, the third point is the total value is the total output is valued at market price. The fourth point is aggregate value of total output of 64 commodities is the gross value. That means consider the total 64 output is the gross value output. Now in that, gross value is always multiplied with their cost of production. Gross value is always multiplied with their cost of production, and net value there is always deduction. Like I told you yesterday, there would be deduction in terms of what? Repair and machinery, depreciation, etc. The next point is, what are some of the precautions in product method? Some of the precautions to be taken in a product method. The first point is, as I told you yesterday, is double counting, which should be taken very much. The next point is the value of the output for self-consumption. Okay, now whatever you produce and which you consume for self should also be measured in national income. The second point is second-hand goods should not be included. There shouldn't be any second-hand goods like second-hand cars, second-hand vehicles, etc. should not be included. Okay students, the next method is the income method. In income method, the national income is obtained by distribution of goods to the consumers. Understood? The national income is obtained by distribution of the goods, and that goods is being sold and then converted into money value. The next is national income is calculated by adding up all the incomes generated while producing the product. Okay? National income is calculated by adding all the incomes while producing the product. Now what are the steps involved in measuring the national income? First is, enterprises are classified into individual groups. Okay, enterprises are classified into individual groups, and factory incomes are grouped into 3 income groups. The first one is the labor income, that is the income being obtained by a labor in terms of what? Wages, salary, pension. So therefore, the income which is being obtained by labor is in the form of wage, salary, pension. Next is the capital income. The capital income is profit, interest, dividend, etc. Next, mixed income comes from farming or sole proprietorship. Okay, some of the precautions in national income are, that means items which should not be included are transfer payments. Now what are transfer payments? Transfer payments is maybe something like social security, pension scheme, etc. All these things are not to be included. The second point is second-hand goods. As I told you in the previous product method, second-hand goods also should not be included in the national income. The third point is lottery, betting. These are all windfalls. Okay, so windfalls like lotteries, betting should not be included. And the fourth is corporate profit tax. Because corporate profit tax has already been included in the national income. Some of the things which can be accepted are imputed value of rent. That means I have a house, I rent the house myself for any office or for business purpose. That I can include it in the national income. And the next is imputed value of services. whatever house I rented, whichever house I rented for myself, I can run my own family business like pottery, goldsmith, etc. Okay, the next thing is expenditure method. This is the last one. In expenditure method, we'll see that what is the money being spent by the government for the society. Okay, so the first point is the total expenses incurred by the society. So how much of money has been spent by the government to the society. Okay, next is personal construction expense, net domestic investment, government expenses on construction, goods, etc. These are some of the costs being incurred by the government towards the society. That means government spends a lot of money in hospitals, buildings, construction of dams, roads, etc. All these comes under expenditure method. Therefore, the gross national product is equal to C plus I plus G plus X minus M. As I told you, C is consumption, investment, goods, and then export minus import. Next, we'll see that what are some of the precautions to be taken under expenditure method. Some of the precautions to be taken are sale of second-hand goods. As I told you again, sale of second-hand goods as vehicles, cars, etc. Next thing, purchase of shares and bonds from secondary market, that is to say from brokers. So that is to be not considered. The next is transfer payments. Transfer payments like social security, pensions, etc. should not be considered. Next is investments on seed, cotton, yield, because I have to take only the final product to be included, not the initial thing like the basic products like seeds and cotton. Finally, what is the final product? If I take cotton, the final product is textile. So only the textiles has to be included in the final product.